What is going on, YouTube? Welcome back to the ClearCryptos educational channel with myself, T. Haas from the Crypto Shop. And of course, you know, I got my man Jay Seals with me. What's going on, brother?
What's up? How's it going out there, everybody?
Yeah, I hope everybody's having a good one, man. It feels like for most of you, I've been here. I've seen me and Justin have kind of been with you guys all day. But you know, that don't stop the show. So we're coming down on the ClearCryptos educational channel, guys. Remember to hit the like, hit the subscribe button. And today on the channel, we're going to be discussing a little bit more of the market, breaking down those FOMC meeting points, as well as I kind of wanted to take a deep dive into what an actual bear market is, because I think there's parts of a bear market that, you know, maybe, you know, people have never thought about before, that can kind of help you put your mind at ease in regards to what you're dealing with right now. Because believe it or not, we're still in what some may call a bear market. Although we don't have that 20% down year to date on the S&P 500, we're still technically in a bear market because we're starting to see signs of a bear market. But the good news is I think we're starting to see signs of the bear market coming to a close. But that being said, let's get into the comments, see how everybody's doing on the night, and then myself and Justin will start discussing the market a little bit. So we got Nick Manis in the building. What's going on, Nick? We got Dillinger Dave in the building. What's going on, Dillinger Dave? Hope everybody's doing a good evening. Yeah, man, it seemed like I just saw you, man. And then we got Boca in the building. What's going on, Boca G? And then we got Foxy in the building. What's going on, Foxy? I see you down there. We had ClearCryptos homepage in the building. Says welcome everyone. Don't forget to hit that like button on your way in. Appreciate it. Congrats on 1K subs. Absolutely. We got Hexy Queen in the building. Says what's good, fam? I hope everyone has had a good day. We're doing pretty good, Hexy Queen. Nice of you to stop by. I appreciate it. And who else we got in the building? Okay. Oh, we got CC Averto in the building. What's going on, CC? And we got Muzz in the building. Yeah, I swear I seen like it's like I seen y'all all day, man. It's crazy. It's crazy.
Oh shoot, I should probably turn on this light. Oh, look at that bow.
Oh, look, he likes.
And there shall be light.
Yeah, he light skin again. Ain't no saving me, man. I'm dark as all get out. I got the lights on. I got everything turned up, but it is what it is. I can't save myself. I think I got to wear like dark clothes or something to absorb.
Yeah, I think you do.
Yeah, but anyway, man, let's get into these markets. Enough about how dark I am. A couple things that you know really stood out in the market for me today was Fed interest rates hikes are continuing until inflation eases. That was like the biggest part or biggest takeaway of the FOMC meeting minutes. But there's some more stuff that we were kind of digging through the minutes. We found some more stuff to highlight that really had to do with crypto. You know, that's not what we're just about. Like, I like to talk about the overall markets in general, but at the same time, when the Fed is actually talking about crypto in the minutes, we got to pay attention to it. So the biggest things to take away is they did not provide specific guidance for future increases and said they would be watching data closer before making a decision. We covered this over at the Crypto Shop earlier today. It's very important because these are the exact words that the Federal Reserve actually put out or came out and said at the podium, right? He literally came out and said, we're going to be watching the market closely before we make our decision, right? Now, as we go and look into other stories and we look into the minutes, you'll start to see a theme that would really explain some of the movement we've had on the S&P 500 as of lately. If you guys don't follow the S&P, you should, but think about the moves we've had on Ethereum moving to an uptrend. One of the reasons why, or one of the things that are contributing to that is one, we've had, good CPI data. CPI is coming down. We've had even better PPI data, right? In addition to that, we've had all of these multiple catalysts, but also we've had the Fed kind of come out and saying, hey, there's a potential, or the market's not the Fed, but the market is kind of pricing in a 53% chance of a 50 basis point hike and a 48% chance of a 75 basis point hike. The thing with this is we're already used to kind of a 75 basis point, right? A 50 basis point would be very, very bullish, but I don't think anybody cares if we get a 75 basis point at this point. But a 50 point basis hike would be very bullish. So we're going to be watching that CPI data very, very closely coming in September, and then in preparation for the actual Fed meeting coming up around September 20th, I think, September 20th, September 21st, somewhere around there. Either way it goes, these are certain things that you got to be looking for in the market. So, Justin, take the mic away before I get to talking too much. You know how I get. How you doing?
I'm good. All right. So let's dig a little bit deeper into FOMC. So if you didn't know, the FOMC minutes is like 12 pages long. But luckily, they have an abbreviated version for people like me who don't want to sift through 12 pages of a whole bunch of nothingness and just get straight to what's actually important. All right. So this is the press release that they come out with. And there's some.
I gotta share your screen, bro.
oh, my bad. I'm so used to being able to just.
I know. I forget you don't have the power.
But this is the press release that they came out with, and so there's a few things in here that's important. So recent indicators of spending and production have softened. Pretty important right here. Nonetheless, job gains have been robust in recent months, and unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, high food and energy prices, and broad price pressures. Now, they also get into the Russian war a little bit. So Russia's war against Ukraine is causing tremendous human and economic hardship. The war and related events are creating additional upward pressure on inflation and are weighing on the global economic activity. The committee is highly attentive to inflation risks. So they know that the Russia-Ukraine war is causing more inflation. However, they have also come out and said, look, guys, we can't do anything about it. It just has to run its course. We can't control this inflation, but we're aware that this is definitely a factor. So then they go on to say the committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. In support of these goals, the committee has decided to raise the target range for the federal funds rate to 2.14% to 2.5%, and anticipates that ongoing increases in that target range will be appropriate. So what's interesting about this is that it's like fighting yourself, right? So employment is great, and that's the reason why we're not quote unquote in a recession. However, inflation is super out of control, right? So how do they slow hiring and bring inflation down and keep us out of a true recession, right? That's the $1 million question. So I don't know how they're going to do it, but they're raising their target range, but not by much. I don't remember what their initial target range was, but I'm pretty sure this is not far off from what the range was originally to get to that 2% over the long run. But yeah, I mean, it's just.
I think the original was. I think they actually said it in this article over here. I think it was like 2.25 to 2.5.
Okay, yeah. So it's still they're still in the regular range that they have been in before. So that's at least positive. But then, like Hobbs alluded to, so they actually talked about crypto a little bit, and I have another article, and let's see, where are we at?
Why are you looking for that? We got Glenn in the building. What's going on, Glenn? He says, "Why does it keep looking like 2008 all over again?" Oh,
yeah.
I'm gonna release the charts here in a second. I'm gonna, we're gonna be knocking down that door here in a second. But then we got Sharda in the building. ClearCryptos fam. What's going on, Sharda? How you doing? Hope you're having a great night. And then we got Austin Hilton in the building. What's going on, Austin? Hey guys, good evening. What's going on, Austin? Any past your bedtime? Anyway,
that's messed up. We heard that.
Glenn says they do it by changing the definition. Yep, that's how they do it. It's all about the wording, man. It's all about the wording. Now it's a party. Did you bring the tequila, right? But yeah, so did you want me to share your screen? Sorry.
Yeah.
I keep forgetting that you don't have power over here.
No power.
I like it.
Whatever. Okay, so in this article, this is more about FOMC. It goes into the same things that we were just talking about, but they throw in some crypto. So the minutes also show concern about crypto, in particular stablecoins. Shocker. And their threat to financial stability and like creating bank runs.
Isn't it like it's just too perfect of a picture, right? Yeah. Like when these things were happening, when all of this craziness was happening with stablecoins, it was almost like they created a problem so that they could fix a problem that they knew they created. Only so they could put it in the minutes and tell us that, now we got a problem. We have to actually fix it. But
right,
go ahead, man. I'm sorry.
It's time to act.
I didn't mean to cut you off, man.
Okay, so in the minutes, they said while the recent turmoil in digital asset markets had not spread to other asset classes, these participants saw digital assets' rising importance and growing interconnectedness with other segments of the financial system, as underscoring the need to establish a robust supervisory and regulatory framework for this industry that would appropriately limit systematic or potential systematic risks. Jesus Christ, if that doesn't sound like regulation coming to stable coins.
Yeah, I mean, go ahead.
Go ahead.
No, I was just gonna say, don't get it twisted, guys. Like, there's a slang saying where I'm from, or you guys have probably heard it too. If you believe this, then I have oceanfront property for sale in Idaho, right? It's one of those things where it's like, if you know the rhetoric, if you know like the history of the government and how that they do things, one thing they do is when they see something they want, they make it illegal first, right? Right? Like that's the first thing that they do. They say, nope, you can't have it. And once it's illegal and they can get it for a cheaper price, then they're gonna sell it back to you at double plus taxes. I'm not saying that that's guaranteed to happen, but it's really looking real familiar right now, right? Like it's starting to look like that writing is starting to be on the wall. First, they scare the crap out of you by depegging, dropping all these stable coins. All these exchanges are starting to drop off the map, right? All of these investigations, allegations, all of this wording that's put out there, this regulation, it just keeps getting thrown out there. And now you start to see it appear on official documents. We did a video the other day talking about, lobbying for crypto and stuff like that.
That was today.
That was today? Oh, shoot.
Yeah, that was today.
Hey, the days flow, man. They flow. Yeah, you never know, man. Look, I'm Austin Hilton. You're Zach Humphreys. I'm the old guy right now, right? So,
yeah, that was today.
But yeah, man, it's just one of those things where if you're not paying attention, you'll miss the boat. So make sure you guys are out there paying attention to the news, paying attention to what's going on, because they're telling you what they're going to do. You just have to read between the lines. So
and no, you're good. And so to wrap all this up, there are some FOMC members that are calling for strong oversight and regulation for certain crypto-related institutions. So it's only a matter of time. I mean, if the Fed's eyes are on it, the SEC's eyes are on it, the CFTC eyes are on it. Like, all these government agencies are looking at crypto, and they're all kind of vying for that control of like who's going to take over crypto and make the regulations come. And if it's me, I really don't want to see the SEC start sticking their nose in crypto. I'd rather either have it be a commodity or have it be a currency, one of the two, but you don't want the SEC in your business.
Oh, they coming. They
trying.
They coming. Ain't no one about it. It's all about making sure that you can, and that's why I like to bring it all the way back to Clear, right?
Glenn.
Yeah, I know he's hilarious. It's one of the things where I like about Clear is like, I believe Clear is going to be one of those companies that are going to figure out the lingo, because they've been watching the lingo for so long. You know what I mean? They've been watching the way the crypto space is moving. They've done the research while the crypto space is moving, and now they're seeing how everything is kind of coming together. They've had the benefit of not having the product out there, but having to have the product evolve before it even launches. You know what I'm saying? So it's kind of cool. I can't wait to see it. I can't wait for you guys to see it. I know that everybody's anxious to see what's going on, but I'm telling you, guys are going to be in for a really good surprise. So let's see. We got
before you go on, I think this might have been somewhat of a rhetorical question. However, I think it's a good one. So Foxy at the bottom says, I can see them regulating stables, but the whole market, where do they even start? I think that's a great question. I think they start at the top. I think they start at Bitcoin and Ethereum and work their way down.
Well, I mean, like, I mean, to Foxy's question, or rhetorical question, I feel like it's a statement, but
it kind of.
But at the same time, here's the thing: the regulation that will come for Ethereum and Bitcoin, and even the larger coins, it will be separate from what's to come for the smaller tokens, right?
Yeah.
Who knows what that's going to look like, but I guarantee you it ain't going to be the same, because to Foxy's point, it's too many. The whole market is too large. However, when you put those restrictions on the big dogs, then the little ones will flee. Meaning the cryptos that were built in straw houses. If you built your crypto on a straw house, right, with using a straw house, you built your house with a straw out of straw. Just the thought of regulation or officially seeing regulation, your house is gonna be gone, right? If you're a little bit stronger and you know what I mean, like you're one of those medium cap, projects where a small cap, but you kind of went through the regulations, but not really, then the SEC gonna help you out, right? They gonna tell you either move to the side or you shut it down. But if you built your house using brick and mortar, right, and you literally knew what was coming, or you had a good idea what was coming before it came, and you pivoted long before, you're gonna be all right when regulations comes. And that's how they're gonna filter out the market. They're not gonna have to do anything. The market's gonna pretty much filter itself out just from taking off the head of the snake. And they're not shutting them down; they're just putting clamps on them to give you an idea of what is gonna happen.
Well, I mean, I think it takes one, right? Like XRP is the one that they're trying to go after, and I personally think they're gonna lose, and that one's gonna hurt the SEC a bit. But yep. I do agree with you that once regulation does come, the ones it'll take one cryptocurrency to get absolutely wrecked, to where either someone ends up in jail or they end up bankrupt and completely on the streets because the SEC did a complete number on them, that all the rest of the cryptocurrencies that aren't in line will either get in line or they'll get out.
Yep, it's the old saying again. I don't mean to keep bringing up slang on the ClearCryptos channel, but you know who you hired. But it's the old slang of get down or lay down, right?
Yeah.
So it's one of those situations where insert name here, right? When we talk about DeFi, right? Whatever name you want to put there, I think you all know where I'm going. But now, when let's say Luna Classic got depegged, which it did, right? But let's talk exchanges for a second. Now, if I wanted to make sure all exchanges were doing the right thing, right? I would go after the Coinbase, the Crypto.com, the Binance, not to shut them down, but just to bite them to say, I'm the boss now. Because of this paperwork, I'm the boss now. You got to abide by my rules. What's going to happen to KuCoin? They're probably going to be okay, but they're going to have to, conform a little bit. What's going to happen to Bitmart? What's going to happen to Uniswap? You see what I'm saying? You see where I'm going? Like, as you start going further down the tier, some people might not make it, right? Yeah. I'm not saying that any of those are bad exchanges or anything like that. That's not what I'm saying. All I'm saying is, what happens when Shiba Inu gets put on, get clamps put on it, right? What's going to happen to the rest of the altcoins and the meme coins? What happens is all of a sudden, Dogecoin is made illegal and they shut it down. I'm just saying that's gonna scare people out of, not people out of the market. It's gonna scare developers out of the market. It's gonna scare people out of the market. And to Glenn's point right here, over 12,000 projects will. I'll give you a perfect example. There's a project in the space, and I won't name projects by name, but there's a project in the space that has had their main feature was a ghost wallet, right? The minute they locked them people up for Tornado Cash, right? For just writing the code for Tornado Cash. What was the next thing they posted on Twitter? Yeah, we gonna come out, but we're not coming out with a ghost wallet. That's how fast it's gonna happen.
Yeah,
because they had you pivot. It's not a bad thing that they did that. I think that was smart, but that's exactly how fast it will happen. In a blink of an eye, people will change their entire business plan if they're smart.
You have to.
If not, we'll be reading about them in the paper.
CoinDesk is gonna have a whole article on them. Locked up DeFi project.
They're gonna be my next video on CryptoNews.net. I'm telling you. So, hey, sorry, my dogs are barking in the back. Hang on one second. Over 12,000. All right, Laura Sheba says Hobbs right, break the leader and the cronies crumble. Yeah. Wizard Zell, hi y'all. What's going on, Wizard Zell? Appreciate you stopping by. Ellis Jackson says, I think USDC will be first wholesale CBDC backed stablecoin just because people are more familiar with it and trust it more. Yeah, and I think you're right. Like, I don't know if it'll be USDC or if it'll be USDT, but I don't think they're done with stable coins either. I think that they need one to make a big noise to scare you out of your position, right? I don't know which one it is. I'm just saying those are my thoughts.
I don't know. Some of these stable coins have a lot backing them. Like, I don't think BlackRock is going anywhere. And unless BlackRock crumbles, at least for, I think, is BlackRock USDC or USDT? I can't remember.
BlackRock? I have no idea.
They back one of the coins heavily, but either way, if they crumble, it's a problem, especially because they got the Bitcoin ETF as well, which I think they released that over the weekend.
Yeah. So. Yeah, and then just I'm sure they will require V3 launch. Obviously, solves it all. Yeah, I mean, yeah, just V3 it and make it a Ponzi. Make it a Ponzi scheme. Just whatever. Anyway,
definitely gonna say something else. So let's get into this bear market talk.
Yeah. All right. So before I get too far off talking, because Glenn be trying to work me up over here. Thank you so much, guys. Just to clear the room. If you haven't smashed the like button yet, what are you doing? Make sure you guys hit the like and subscribe button to tune in to anytime ClearCryptos releases a video or goes live for the day. Thank you guys so much for stopping by and spending a little time with myself and Justin tonight, talking about the markets and hearing me rant about the whole market going to HE double hockey sticks. The circles coins, yeah, smash the like regardless. Just get it, Glenn. First time hoops in. How about you from Bleeze? We'll continue to support. Know about you from Bleeze? We'll continue to support. Oh, thanks, man. I appreciate you, Will. Wizards, I appreciate you. Thank you. All right. So I keep forgetting Justin don't have access.
No type of access whatsoever. It feels so weird.
I know. I love it.
I can't do nothing.
I actually like coming over here because I know you can't touch the deck on the screen. I turn around and be a whole different thing over there.
Yep.
All right. So guys, before we continue, I wanted to talk to you guys about understanding a bear market. Now, I was just doing a little research and I was going through, Investopedia, and I found some interesting things about a bear market. Now, besides the obvious stuff, which some of you might not know, and I'll read it to you here in a second, but I found some very key points in recognizing a bear market and the phases that a bear market actually goes through. And I wanted to take the opportunity to share what I found with you and then go through the charts and see if we can find some similarities. So that's kind of what we're going to do into the close. So get comfortable. All right. Bear market is when a market experiences a prolonged price decline. It typically describes a condition in which security prices fall 20% or more from recent highs. Now, if you guys remember, about a month ago, 3 weeks ago, I think we've had our first 4 weeks of green, our first month of green. Mm-hmm. But prior to that, the S&P 500, the Dow Jones, and basically everything was, trading 20% off its year-to-date highs. That is one indication that we've entered into bear market territory. Now, it further breaks down some key takeaways. I'm not going to read the whole thing up there, but these key takeaways, this is how I used to pass my quizzes in school. Bear markets occur when prices in a market decline more than 20%, often accompanied by negative investor sentiment. What did we have after the pandemic, right? Or during the pandemic? Negative investor sentiment, 20% drop in the S&P 500, the Dow Jones, i.e. quick little flash flood of a bear market, followed by a ridiculous uptrend of a rally. And now we started to come down, right? So let's just keep paying attention. Bear markets can be cyclical or long-term. Cyclical referring to a cycle, right? 3 months, 6 months, something like that. Long-term referring to long-term, 5 to 10 years. All right. The former lasts for several weeks or a couple months, and the latter can last for several years or even decades. Ooh. Short selling, put options. I know, right? I couldn't imagine being in the bear market for a whole decade. I would just be a bear forever. Like you could never turn me at that point. I'd be like, nope, we in a bear market.
You can only go down for so long. Like
you have like PTSD from bear market. You're like, it's a rally, bro. We're in a bull market. Nope, it can come back down anytime.
Yeah.
Like you be having like flash flood. You like, nah, man, it's coming back down. I know it's coming back down. So understanding bear market. So stock prices generally reflect future expectations of cash flows and profits from companies. The growth prospects wane and expectations are dashed. Price of stocks can decline. Herd behavior, fear, and a rush to protect downside losses can lead to prolonged periods of depressed assets. This right here, y'all.
Yeah.
This right here. When I read this, I was like, God, somebody needs to hear this.
That's the emotion right there. That's 100% the emotions of the market. Whether you're in crypto or stocks, it don't matter.
Yeah, this is herd behavior, fear, and rush to protect downside losses. This is what you call FOMO to the downside.
Or that too.
Yeah. Now, here's where it gets a little interesting, however, right? One definition of bear market says markets are in bear territory when stocks on average fall at least 20% off their high, but 20% is arbitrary number, just as 10% decline is an arbitrary benchmark for correction, right? Another definition of a bear market is when investors are more risk averse and risk seeking. This kind of bear market can last for months or years as investors shun speculation in favor of boring, sure bets. Okay. Now let's keep reading. The cause of bear markets often vary, but in general, a weak or sluggish economy, right? Now the economy wasn't sluggish. The pandemic created a sluggish economy, hence the quick bear market, right? Bursting market bubbles, housing market 2008, right? Pandemics here today, plus war here today, right? Geopolitical crisis, I can argue we got that too, but and drastic paradigm shifts in the economy, such as shifting to online economy.
Online, I think you're right.
Yeah, online economy are all factors that might cause bear markets. The signs of a weak or slowing economy are typically low employment, which we don't have.
Nope.
Low disposable income, which we don't have.
Debatable, but
spending is up, market sentiment is up, and consumer spending is up.
Yeah,
let me get it out. Go
ahead.
Weak productivity. We got that, right?
I feel like debatable again, but okay.
But again, it's weak because of the pandemic, right? But it's just funny because
supply and demand. I give it to you.
As I was reading this, dude, I was doing the same thing in my head. I'm sitting here like, dang, where are we? And then it says a drop in business profits. We don't have that either.
This is tough for me because we don't have low unemployment. I do feel like even though spending is up, people do have low disposable income. They just don't care. You know what I mean? They just don't. They just don't care. Look, in addition, weak productivity, dropping business profits 100%.
Any intervention by government in the economy can also trigger a bear market. So it's like, in regards to the definition of a bear market, we have flipped the script. Like, I feel like they need to rewrite this because there's a lot that fits our bear market, but then there's a lot that doesn't fit our bear market. And I think that's why the markets have been completely confused. If you look over Twitter and everybody that's a financial guru on Twitter, you will see 30 different predictions for what's going to happen and what are we doing. Everybody's like, oh, this is just like 2008. Oh, it's just like 2020. It's just like, bro, like, I don't even know if we can compare this particular market to anything we've seen before.
You can't. But the federal funds rate, though, that next paragraph,
we're going.
That is basically what the only thing I can really turn to.
The only thing that we can turn to. Exactly. It's the reason why I didn't highlight it. I was just like, okay. I mean, that's it. But changes in the tax rate or in the federal funds rate can lead to bear market. Similarly, a drop in investor confidence may also signal the onset of a bear market, which I think that is what we got, you know, when we started getting the raise in the federal fund rate, right? Like, it's like we watched this movie and now we're reading the book, right? So bear markets can last for multiple years or just several weeks. There may be rallies within secular bear markets where stocks or indexes rally for a period, but the gains are not sustained and prices revert to lower levels. Now, that's in a secular, meaning a little bit longer, right? But cyclical bear markets, on the other hand, can last anywhere from weeks to several months. The question is, which market are we in, right?
Yeah.
So the last prolonged bear market in the United States occurred between 2007 and 2009 during the financial crisis and lasted for roughly 17 months. Now, here's where it gets even more interesting. We come down here. Obviously, this graph here, it's showing you when the markets fell down 56% back in 2007, and then the recovery up 49% to its all-time high, right? Now, here it goes. Tell me if you heard these words before, right? The 4 phases of a bear market are as follows. The first phase is characterized by high prices, high investor sentiment. Towards the end of this phase, investors begin to drop out of the market and take profits. Now, I'm going to pause right there for the calls because I want to show you something. High prices, investors start to drop out of the market. Okay, this is the pandemic of 2020 right here. I switched to Hashinachi candles because I wanted to show the trend. Now check this out. The market goes up. Look how far this market went up. We went from this bottom at 218. In less than a year, we went to $479 on the spot. We go back to that definition and it talks about high prices. People start to fall out of the market. Check this out. I think we've entered in the phase 1. Would you guys say that? Okay, let's go to phase 2. Phase 2, second phase. Stock prices begin to fall sharply, which is what I just showed you. Trading activity and corporate profits begin to drop, which is what we saw during earnings reports. And economic indicators that may have once been positive start to become below average. Some investors begin to panic and sentiment starts to fall. This is referred to as capitulation, which we started to see that when the market started to get lower and lower. We started to get negative catalyst after negative catalyst after negative catalyst. Earning reports were coming out and good news. Remember we went through this? Good news was bad news. Bad news was bad news. It didn't matter what you said. The market was selling off, right? Now, the third phase shows speculators start to enter the market, consequently raising some prices. And this is why I say I think we're toward the end, because I feel like this is the phase that we're going to get to before we tank one more time and then we officially go bullish. Because I feel like this right here is speculators coming in, such as myself, YouTubers, you know, financial investors, whatever. They're coming in and they're saying, oh, we got CPI data coming up. Oh, we got PPI data. It's coming down. We're good. We're coming back up. We got the, you know, we got the political, we got the midterms coming up. This is all good news. Speculators coming into the market, pushing the prices up, only to get wrecked one more time before the market turns around. Now let's go to the last phase. In the fourth and last phase, stock prices continue to drop, but slowly, as low prices and good news starts to attract investors again. Bear markets start to lead to bull markets. What are we seeing? Now we switch over here. We go back to the 4-hour chart, right? Now we're not getting these sell-offs like we were getting, you know, back in June, right? We kind of had this, and this could, I would argue, is also the speculator phase, right? These increases and then these harsh sell-offs back in June. But I think that prices are going to start coming down again, but I think they're going to start coming down slowly. In conclusion, ladies and gentlemen, I feel like I know what a bear market is, but when I went to Investopedia, it was like I seen this movie, I talked about this movie, and then I got to read the book. So, Justin, your thoughts, man? I'm sorry I took up all the time, but I had to break that down. I thought it was very interesting.
Yeah, that was educational. You know, I want to bring it back to crypto for a second, but also relate it to the stock market. Absolutely. So one thing that was interesting, and I don't know how many people caught it, but probably 2-3 months ago when we were like super bear territory, we looked at the SPY and then we looked at all the cryptos, right? Because one thing that a lot of people were saying, they were like, oh my God, it's crazy. All these cryptos are down 70%, 80%. Like they're never coming back. And we're like, wait, hold up. Look at the stock market. The stock market, real stock market businesses, not just the ones that, you know, these are businesses. We're not talking about
70%
like,
down,
yes,
80% down.
We're not talking about, you know, ish coins. We're talking about businesses. We're down 70%, 80%. We literally saw a business go from being up like $3,000 to being almost down to like $50. So it's insane what the bear market did, and that's why, it makes me feel like this bear market was a lot different than every other bear market that we've had. It's almost like the Great Reset, right? Like if you missed your opportunity to get into some of the best crypto projects that you really believed in, that you saw took off in 2020 and 2021, or stocks that you've seen take off, this is the time to actually get in now. And yeah, I mean, can we fall down again? Sure. But I mean, right now, I can't be anything but bullish based off of the charts. So, I mean, whether we're in the third phase or we're in the fourth phase, you got to look at it long term. And long term right now, you could look back 10 years from now and be like, damn, I remember when Bitcoin was trading at 20,000 or whatever, however low we got, 22,000. And now it's at, 150K. So you just got to think about the long term. But yeah, this phases of the bear market and just the bear market is interesting. This has been different than any other bear market that the United States has ever gone through. And, we know what caused it. We know what the cause was, but I still don't think that the fix for the economy is in yet. So that's why I feel like there could be some more turbulence to come. So what you laughing at?
Ellis says, will there be a quiz on this? I said, I mean, maybe. I don't know. I literally went through this in like 30 minutes before the show because I was just reading up on it and I was just like, you know what, let me just look at it. Like, I've never really looked at it. I know what it is because I've been told what it is, I've never really done a deep dive in it myself. And when I dug into it, I was like, oh my God. You know how like, people say like Harry Potter books are better than the movie? Yeah, well, I've never read the book, but I've seen the movie. And I'm certain if I go back and read the book, I'm gonna be like, why didn't they put this in the movie? You know what I mean?
Yeah, 100%. Yeah. But you know what's crazy about this article too is the difference between the number data and then the speculation, right? So at the very beginning, it said that we all know like 20% is a bear market, right? Yeah. But then it's like, maybe it's a speculation on their part. And it's like it makes me think like, okay, I'm more of like a numbers person, right? Like when you have to wrap everybody, like everybody's emotions and everybody's speculation, everybody's thought, it doesn't give me a quantitative like number. So it's like, what point does the bear market really start then? If it's up to the investors and the investors feel like we're in a bear market, well, when do they? I mean, they come back eventually, right? But it's like, I like the set in stone 20%. We're good.
And that's the thing, and that's why I read it. That's why I went back into it, because to us, we're looking at the percentages, but there's so much other things that you have to look at. And you start to hear people use that word capitulation, and it's like, well, why is that important? Well, because capitulation is a key factor in phase 2, right? So it's just like, okay, we're finishing phase 2. Now, after capitulation, it's a good time to get in the market. If you truly believe the phases of the bear market, which I'm sure they got this off of history, right? If you truly believe those phases and you see what's happening as an investor, I mean, I'm a big fan of Me Kevin, right?
Yeah.
Me Kevin, as soon as he saw capitulation, that's when he entered back into the market, and he's been all in ever since. I didn't really know why, like it was, so I went and looked it up, and I'm like, oh, interesting. So just food for thought, man. Like, this is called DYOR, and I know this kind of went a little bit far right in regards to crypto, but honestly, it's still important. It's important for crypto. It's important for investing, and that's what crypto is. You're investing in something, so you need to understand how investing works. So I encourage you all to get out there and do your own research. And it might be a quiz, Ellis. But shout out to Foxy. Foxy said it's like reading this list of symptoms, having them all at once. That's exactly how I felt when I was reading. I was like, oh my God, we're sick. This is like a Lifetime movie. Yeah, Muzz, it's crazy. Description is, you're saying it was like a Lifetime movie description? Yeah, it is. It's definitely a dated statement. Exactly. Austin said it was like 1932, and I believe it. Foxy says, I think that's when he got his first karma. Jeez.
It had to have been a Ford Model T.
Yeah. And then Sharda says long term equals paid. Yes, I agree. Yeah. This is some great education, gentlemen. Hey, thank you so much, man. It was kind of on the cuff, but myself and Justin were certified instructors in the Navy. So like building a show where we get to educate people is it's pretty much what we did every day. So this is something a lot of investors should know for sure. Ellis, yeah, I agree. Nick Manning says, be sure to share this out and hit that like button. Yes, do so. Somebody, I'm telling you, somebody needed to hear this tonight, man. And, you know, I'm glad it kind of came to me to do this, but I really feel like somebody needed to hear this. Somebody needs to know. And there's more in here about short selling puts and inverse ETFs. I just don't really want to put that on nobody's brain, because if you don't know nothing about short selling or inverse ETFs, you never need to touch them.
Yeah.
Because there's a very, very high risk of failure there. But all right, let's see here. But yeah, man, I mean, like I said, overall, bringing everything back to ClearCryptos, that particular content, that particular line of thought is honestly one of the reasons why I love being a part of ClearCryptos, is because those are the conversations we have at the lunch and dinner table. Would you agree? When we go out with them, go out with them, like those are the in-depth conversations that we have, and they really challenge you to really, really think about the overall outlook of things moving forward. And I'm sure they have conversations even on a higher level, right? And I'm just very, very comfortable here. Even though I don't know the whole plan, I have a very good idea of what the future will look like. So we're gonna get ready to close it up here. Justin, you want to give some final thoughts, man? I got to get back to the family, guys. I haven't really been able to spend a lot of time with them all day, so I do apologize for cutting it short. But yeah, Jay.
Yeah, I mean, I just want to thank everybody for coming out. You know, I want to expand more into ClearCryptos, but I've been so excited the past few days with all the information that that's been shared with us that I'm like, I can't talk about it. So it's like, I don't want to slip up and say nothing because it's just too exciting. But, you know, super excited for the future. I'm actually really excited for Daytona. I know Foxy mentioned it, but we're all going to be out in Daytona. And I believe that there's some crazy things that are about to go down that I'm super excited for. And so, yeah, I hope everybody tunes in for that when all that information gets dropped. And yeah, I think just like Hobbs said, like one of the big things for us is education, right? Because education is power, knowledge is power. And, you know, we don't know everything, but nobody knows everything, right? So the more that we can teach and educate everybody as an investor, the better we are as investors, right? For me, it's always retail versus institutions, and we are the retail investors, and our goal should be to take the money from the institutions. So there's a piece of the pie for everybody. We're not greedy, and we're not greedy with our information, and we're here to share it and, you know, to bring everybody up and to make everybody better. So I appreciate y'all. And I see some people got some good information tonight, so that's always great to hear. And
yeah, good to hear the feedback. Thank you.
Yeah, we will see y'all on the next one.
No doubt, no doubt. And you know, for me, I echo Justin's sentiments. We will never be gatekeepers. We will always try to spread the information because somebody tried to spread it to us as well, right? What I encourage you guys to do is follow the ClearCryptos channel, YouTube channel. If you aren't doing so already, subscribe to the channel. Don't forget to follow the Twitter page. And don't forget to hit the link up here and get into that Discord. You know, I got to get my spiel. Get into that Discord right here so you can find out all the upcoming information in regards to ClearCryptos and when they are going to launch. What I will say is I appreciate you guys giving us your time, coming and spending 45 minutes with myself and Justin. But guys, our time has come to an end. And I would just like to say you guys have a great night. Don't forget to spend time with your family. But from the ClearCryptos Education Channel, my name is T. Hobbs. That guy above is Jay Seals. And we'll catch you on the next one, man. Peace.